If you've opened your HOA statement lately and felt a little bit of sticker shock, you're not alone. Across the country, fees are on the move. And while the national median monthly dues reached $135 per month in 2025, in many regions, and especially in high-amenity communities, that number is easily north of $300. But here's the reality of 2026. HOAs are no longer a choice that you can easily avoid. Today, roughly 74 million Americans, about 28% of the population, live in an HOA-governed community. 1/3 of all single-family homes in the United States now carry these fees. And if you're buying a home today, there is nearly a 44% chance that it's going to come with a monthly HOA obligation. Since they're here to stay, let's talk about how the math actually works for you. Now, it's easy to view these fees as just another bill, but they are actually the financial backbone of your neighborhood. They fund essentials, professional management, community safety, and insurance, but most importantly, they fund your reserves. This is the savings account for big ticket items like roofs, repaved roads, pools, other renovations. Think of it this way. You've got two choices. You can pay a small, predictable monthly increase that keeps the community in top shape, or you can deal with deferred maintenance, which is just a fancy term for ignoring problems until they break. Neglecting your community assets can reduce your property value by 5 to 10% over a decade. In a community like yours, that could mean losing $20,000 to $40,000 of your home's equity. Without proper reserve planning, you face the sticker shock of a special assessment. We have seen scenarios where homeowners are hit with a sudden and mandatory bill for $5,000, $10,000 or more because the board didn't align dues with the actual cost of repairs. I don't know many people who just have an extra 10 grand just sitting around for a surprise bill. The good news is that 2026 has brought a new wave of transparency. You have rights. For example, in Colorado, your HOA is now required to provide you with a copy of your personal payment ledger within 7 business days of your request. You no longer have to be kept in the dark about your account status. But the real power move for a homeowner is knowing your community's percent funded. This number tells you exactly how much your HOA has saved compared to what it needs to save for future repairs. Now, if that number is low, say under 30%, you aren't just buying a home, you're buying a financial crisis in the future. If it's in the 70% to 85% range, then you are buying into a stable and well-managed asset. And this is where my perspective as an HOA advisor changes the game. I perform a deep dive reserve analysis to ensure your board isn't just guessing. We look at construction inflation, rising insurance premiums, and asset lifespans to make sure that every dollar of your dues is working to prevent those $10,000 surprises down the road. Transparency is the best defense against financial disaster, and that's why I created my treasurer pack for focused meetings. This simple one-page document focuses on the key financial topics that should be a part of your community meetings. An HOA fee isn't just a cost. It's an investment in your quality of life and your equity. So let's make sure that your community's math is actually mathing. Click the link down below to get your treasurer pack and see how your community's financial health stacks up today.